just think that it's just been underperforming, for many, many years in terms of versus big caps versus, many other things, right? And your rationale is not wrong. The only thing is, has it always been like that in history, right? So instead of looking at IWM, actually look at the Russell, 2000 index, like which goes back even a little bit further in time. So this
Mhm.
chart here is Russell 2000 over SPX, which is S&P 500 index, right? So you're seeing if it's high, that Russell's outperforming. If it's low, that the SPY, S&P 500 is outperforming, right? So you can see in history, I think there's a little bit of recency bias to say that the small cap indexes has been underperforming, because that is certainly the case really since about 2014 all the way up to now, right? So that's been about 10 years, and everybody just can't remember what happened in the last 10 years, as opposed to what happened, 10 years before that, which is basically showing a lot of outperformance with a small cap, right? That's
Yeah,
wasn't
you're,
always the case, right?
you're
That's just
quite
one.
right. You're quite right because I've just been trading for like 15 years. So
Yeah, so you have to
the
kind of
last
go
15
back.
years says, oh, Russell's never done great versus the SPX.
Right,
That's
but that's not
even better.
true. Because yeah, if you look
Yeah.
like a little bit further back in history, you'll see that. One thing I can say that is, if you just look at the RSI, you can see something that, and this is a monthly chart. If you look at the RSI, you can see like whenever you start to have a little bit of like a divergence, for example, like you see price. Yeah, see, I already drew this over here. You see price kind of gone up. In this particular case, not really price. It's more like Russell 1000 over S&P 500. You can see that as Russell outperforms, and it is outperforming under a bearish divergence down here on the RSI, right? Like you can see the trend's exhausting, right? So that really marks the top. I mean, it didn't really become like the top. It kind of came a little bit of a double top before it starts kind of rolling over, right? But I think this bearish diversion that's been going on for like 4 years probably meant something. Probably just meant that, hey, the time Russell 2000 over S&P 500 is over, it's time for large caps to take over. And certainly that's been happening over the last, 10, 15 years, right? But something that's also very similar has happened too over the last 4 years. What you're seeing here is you're seeing that the Russell 2000 has been underperforming the S&P 500, but you actually see a bullish divergence over here, right? So you're
Mm.
really talking about like, kind of like a little bit inverse picture over here, right? So I wonder whether or not we're at a juncture where we could potentially have a reversal of the trend, right? Because you always seem to have this kind of oscillation going on based on history
Correct.
and based on this, bullish
The
divergence.
wheel of history is turning.
Right. Yeah. And it looks like there's a loss of momentum for the large caps versus Russell 2000. That's basically what this indicator is showing, right? Another thing too, if you look at the history of all this, available data that we have, you can see like RSI has really been like oversold down in like the 20s over here for the Russell versus S&P 500 3 times, right? Which mark like one over here, and one over here, right? So, oh, sorry, one over here. And then we went, and then the actual ratio actually went underneath of that, but the RSI went up. But these are really like the oversold conditions for Russell, right? So I think it's very, very possible whenever you have something like this and you have bullish divergence and it went down further, I think that the trend may be ending relatively soon. So that's one thing to kind of pay attention to too, because whatever it is that you think is going to happen, it doesn't always have to end up being that way, right? One last thing too, we also had a very important horizontal zone, you know. So I wonder whether or not this could be, and there's a lot of confluences here, right? Like 4 years of bullish divergence, horizontal zone. I wonder whether or not we're at a pivot over here to potentially maybe form a little bit of like a double bottom potentially, and then it might end up reversing. And when it does, it could be pretty powerful. So that's one thought, right? The other thought was I also wanted to show you this too, is the IWM over SPY. Actually, no, that's not what I want to do. Oh, yeah. I want to show you IWM chart, and I'm going to get rid of the momentum. I'm going to get rid of my GAN, because my GAN is not as good as Matt's, so let's hide it. What I'm going to show here is I'm going to show you, I'm going to add um, S&P 500. I'm going to overlay it. Since the induction of the IWM, you can actually see that IWM has actually outperformed SPY, right? Really since like 2000.
Wow.
Yeah. So that's an argument, right? Another thing I also want to point, I'm going to make both of these lines just to kind of make things a little bit more consistent here. What I want to show you here, okay, so if you ignore the dot-com bubble crash, you ignore the great financial crisis, you just start looking from great financial crisis moving forward, and just like what Matt is showing, like if these things go in cycles, so probably like I can count like 4 cycles. Cycle number one over here, right? Cycle number two, cycle number three, and cycle number four, right? So if you look over here in terms of what happens is you're going to have a pretty big dip down here. And whenever and SPY is going to also have a very big dip down here. But whenever S&P 500 when it kind of comes up from this big dip, whenever it tries to make a higher high, you can see that Russell always also trying to make a higher high over here. But then you end up going to have a sell off on both, and that I think that might be like a little bit of a rotation sell off right around there. So what happens is whenever S&P 500 makes a higher high, Russell 2000 within like a year or so, like it's end up going go like pretty parabolic, like and
Mhm.
it's going to make a higher high pretty significantly after that, right? So that's that cycle right there from 2011 all the way to like maybe like 2014, 2015 or so, right? And you end up having a little bit of a dump right there, right? And you can see that unfortunately, Russell 2000 is going to be a lot more sensitive to any kind of economic downturn, as well as S&P 500 holds pretty well. So what we're going to see here is, S&P 500 makes a higher high, right? An all-time high over here. Russell 2000 lagging. They both go down, correct, rotate, and the next thing you know, Russell 2000 just went nuts, right? So whenever S&P 500 makes a new higher high, I think it might take maybe a few months to a year for Russell 2000 to catch up with rotation funds going into the small caps, and they're just going to pump it, right? Same thing happened over here at the dump, from the trade conflict and um, from the COVID, like big dump for
Yeah.
Russell, right? S&P 500 held pretty well, but same thing, right? As soon as the S&P 500 over here made an all-time high, Russell also did like a little bit of peak right here, right? But there's a little bit of rotation that happened afterwards. And then you have like this beast mode of IWM just going like crazy, right? Yeah, so S&P 500 also follows, but like look at this, like this is insane, right? So what's happening here so far, right? S&P 500 made a higher high, right? Made an all-time high. Russell 2000 is lagging. We have a little bit of a slump, maybe a little bit of rotation going on. What's going to happen next? You tell me. So that's one thing too. And yeah, let me go back to any questions so far, guys.
That's an amazing way to look at this. I'm just like, my mind is kind of blown.
It's I want to show you something else that I also thought was amazing too, and I just saw this earlier. You want to look at the money supply, the M2 money supply.
Mhm.
This data is from the Federal Reserve. So that's the blue line right there. It tells you how much money is available, for a total US money supply, right? It's like completely perfectly aligned with the IWM.
Oh yeah.
Look at that. It's like every single time when it dips underneath this line over here, like these are buying opportunities because it's probably going to catch up to the money supply. That's why they print money. Like you're gonna have some fears, you're gonna have big sell-off, but the money printer keeps going and it keeps on pumping up stocks, right? And it just keeps on doing this and it follows this line to a T, even for this big parabolic move up here during COVID, like it followed it to a T, and you have some quantitative tightening over here, follow it to a T, right? Actually served a little bit as a rejection level over there. And right now it's kind of fluctuating around that level. And guess what the money supply is doing? If you just look at the money supply by itself, it looks like it's changing trend, doesn't it?
Yeah.
Yeah, it looks like it was going down with quantitative tightening, and now you're having a little bit of easing here, right? You can actually look at this with the Bollinger Band. This is like a monthly chart. You can actually look at the Bollinger Band. And what are you seeing here? You're seeing that it looks like it wants to challenge the 20-month moving average. It looks like it wants to cross back above. It looks like the 20-month moving average is flattening. It looks like Bollinger Band is squeezing. So
Yeah. Squeezing.
these are like absolutely like beautiful. I just saw that and I was like, wow. And that was just like an hour ago. That's what I did while you were taking a nap.
Wow. Oh my gosh.
And one more thing too, I want to show you a couple other things. Just going back to IWM chart and get rid of the Bollinger. I'm gonna go back to it just for a second. I probably took up too much of your time. But
No, no, no. This is you've blown my mind 3 times already now. Just keep going. Keep going.
yeah, I'll keep
You
going.
can take it.
I'll show you one more thing. I'll show you, like everybody talks about how IWM is rate sensitive, right? This and that, right?
Yeah.
Okay, let's put up the 2 years, see whether or not IWM is actually rate sensitive. Do you think it's rate sensitive? Do you think that when rates go up, IWM is going to go down? Does it look
Hmm.
like that to you? No, right?
No, it does not.
No.
It's like,
What is
well,
everybody on CNBC talking about? Why are
um,
they keep on getting fixated on the rate narrative? Look at global liquidity. Stop talking about rates. The more you talk about rates, the more I want to buy IWM.
Well, it's
That's
the same reason why they keep on bringing up Elon's pay package too, because they want to push things down further.
yeah, like why I know exactly why they're doing it. You know exactly why they're doing it. But okay, I'm done talking about all that. I'm just going to talk about if you believe in cycles, which again I point out. I think so far I point out like 4 cycles after the great financial crisis, right? Cycle number 1, 2, 3, and 4. Each of those you basically have like your 20-month moving average, basically just kind of flattening out, and then when it starts to upslope, that's when a new bull trend starts, right? Flattening out, upslope, new bull trend, right? If it tries to go upslope here a little bit before COVID, but it just wasn't able to because of COVID, right? And it went back down and it upslope and it bull trend, right? So far what's happening here in the 20-month moving average, right? It looks like we have a little bit of a squeeze over here too. Every single time before it goes up, you have a little bit of a squeeze, right? You have a little bit of a squeeze, right?
yeah.
And you also have a little bit of a downtrend that push towards the lower Bollinger Band, right? Or close to the lower Bollinger Band or through the lower Bollinger Band. And then it goes up, right? What just happened, right? So I think we are ready, and also just price just spending a lot of time closer to upper Bollinger Band here. It looks like it just wants to kind of push up a little bit further and just kind of push up a little bit higher, right? That's what I'm seeing on Bollinger Band now. I have to talk about the monthly Ichimoku cloud. That's my favorite thing.
It is fantastic.
Yeah, if you look at this, it just looks absolutely gorgeous. What happened over the last few cycles, right? It back tested the top of the Ichimoku cloud, ran for like 3 years, right? Came back tested the top of the Ichimoku cloud, ran for another 2 years, right? Came back down, went through the Ichimoku cloud, but bounced back up in V-shaped recovery, back tested the top of the cloud, went parabolic, right? What happened this cycle so far? Tested the bottom of the Ichimoku cloud, bound V-shaped, and right now we back tested the top of the Ichimoku cloud. So this looks like a lot of confluence in terms of what's happening. And you also can see like the Tenkan and Kishin, the conversion and baseline, the blue and red. When a blue crosses the red, generally good things happen afterwards, right? So you have the bullish TK cross over here, bullish for 3 years, right? Bullish TK cross over here, bullish for 2 years. Bullish TK cross here, bullish for like a year and a half. Bullish TK cross that just kind of happened about a couple months ago. So there's a lot of confluences over here to really make you think that this is something that is looking pretty decent. And just going like look at your weekly chart too. Like if you look at the trend, if you just pull up like the bull market support band, which includes the 20-week moving average and the 20-week simple moving average or 21 exponential moving average, right? I don't like the practice in percentage. Let me change it to logarithmic. Yeah, but if you just look over here, you can see like right now the bull market support band is pointing up, right? So these moving averages pointing up, and when it points up, it's more likely to serve as support rather than not, right? And if you also
Mhm.
look at Ichimoku cloud, there's a lot of confluence over here, support. Matt was just showing the conversion line was potentially a support. It confluence with the moving support band is pointing up. So most likely it's going to end up, being pretty decent support. If not, it could drop down, like you said, to the baseline. It could drop down to the cloud. All these are possible, but I just think that there's a lot of confluence over here so far. If you also look at just the trend itself, like 20-week moving average, 50, 100, like this is a bull trend. Like there's no argument. This is objectively a bull trend. So it just tells you that we've so far over the last, a few months or to a year or so, we've just been, for the most part, making mostly higher highs and higher lows. So I think that rests my case in terms of what I think is going to happen.